All right, good day everyone, and welcome back to Quest for Alpha. I'm recording this on Saturday. The update will be with respect to the week of March 29, 2026. This week was another pretty difficult week for the markets. The market had continued to come down, and if we take a look at our SPY index, representative of the S&P 500, you can see that at least on the weekly chart, we have a pretty significant drop. Last Monday, the market wanted to come higher, but towards the end of the week, it actually dropped significantly. And this has been going on for pretty much a month. You can see that February 23rd, which is a Monday, this is where the market was trading. It was an all-time highs. And then we've had very strong consecutive 4 weeks of bearish momentum. Now, if we look at the NAS 100, they've been exhibiting a similar behavior, and there was actually a very, very strong drop down. Now, can we predict what's going to happen next? Absolutely not. From a fundamental perspective, it depends what President Trump says and does sometimes, and it is very, very hard to determine whether we are going to see some positive signs that the market is going to go higher. If I follow my approach, which is more on the technical side, what I anticipate is going to happen is that the price may come to either this level here or to this specific zone and then bounce off. So for the near term, I do anticipate that in the next few months, we are still going to be in some sort of bearish momentum. And you can see the very similar behavior on the SPY or the S&P 500. What does that mean? It means that I need to be very careful where I place my trades and how much money I invest in any individual stocks or index funds or any type of investment altogether. However, like any other week, let's go through some of these stocks that I have been personally invested in and to see how they have behaved. I can tell you up front that they've done better than the market itself. So let's go through it, and we can do it on the weekly time frame. Some of the active trades that never really reached a 2-to-1 risk to reward. For those of you that are new, I've tried to talk about two different strategies or two different approaches to manage the trades. One is when the price action reaches a 2-to-1 risk to reward. So let's just assume that I had entered somewhere over here. This was my 2-to-1 risk to reward. Had the price had reached a 2-to-1, I would have taken 50% off and let the remaining portion run. And the other method is if the price reaches a 2-to-1, then you get out of the position at 2-to-1. You remove 100% of your funds. Now, Novo Nordisk, I've talked for many weeks already. It has been a stock that's not very conventional. I've left it running, even though I would have probably exited right over here at this point. But because I'm following it on a longer term time frame, I'm still in it. And by longer term time frame, I mean the weekly and the 3 months, as opposed to all of these other stocks that I've been following, where I have used time frames of the monthly and the daily. RSG, if we just look at it on the weekly, it had actually dropped. It dropped very close to the stop level. It just wicked and came up. So we're still in play here, but you can see that it was a drop since last week. Nevertheless, most of the stocks that already achieved the first target have shown a little bit of bullish movement relative to previous weeks. So you can see that Equinox had gone a little bit higher. Lin has done the same thing, although there was a pretty significant drop at the beginning of the week. CTVA had a very, very strong week. Merck & Company had a very, very strong week as well, I would say, relative at least to the previous week. Regeneron had an okay week, but definitely higher than where it was last week. VRTX, unfortunately, did have a losing week. And following my approach to this strategy, this is, again, a stock that had already reached my first target, and now it had dropped to the break-even point. I did not get a chance to exit this trade on Friday, but come Monday, if the price really drops, and maybe on the hourly, it closes below this wick over here, I will be exiting the trade. So Monday, I'll be monitoring this one very closely. And then ALSN, go on the weekly time frame, it actually had a decent move up of almost around 3.3%. So altogether, if you just take a look at roughly how the active trades have been behaving, they've done much better than what the overall market did. And that's what we are trying to see with this strategy and this approach, is to identify stocks from a technical perspective that are not correlated with the overall market. Of course, there's going to be situations where if the market is tanking, then these stocks are going to struggle as well. But if the market is doing well, we want these to do even better. And if the market or overall market is doing bad, we want these stocks, following this approach, to do less bad. Okay, so with that, what I wanted to just go through very quickly is share a summary of where we are currently with the portfolio. Meaning, since I started this channel in early November, I have communicated live about all of these different trades that you can see here. So the active trades, the ones that achieved first target, and those that I have closed. There are some short-term setups here. Before we move forward, TW, Tradeweb Markets, is another stock that I entered this week. It is in the negative, but you can see that there was a nice consolidation here. The price came above it, closed. There was another consecutive candle, and I did not enter here. I actually waited for the price to come back here, and that's where I am right now. Where I am right now, I entered here, and it has been going against me for the last few days. That's because I entered on Thursday morning. So to get back to where I was before, I'd like us to go through my portfolio management tool, or really an Excel spreadsheet where I tracked all of the trades that I have talked about in this channel, and let you know where I currently sit. Okay, so if we take a look at it, and please don't pay attention too much about the dates. These are really, you can go through all of the different videos, but these trades have all taken place since the beginning of November. So it's been pretty much 5 months, let's just say 5 full months since then. There has been almost 30 trades, so 29 trades. Try to do here is to cover 2 different trade management approaches. Approach number A and approach number B. A is where you take 50% off once a target of 2 to 1 is reached, and you let the remaining portion grow. And then method number B is where once the price hits a 2 to 1 level, then you exit 100% of your position. If I take a look at strategy A over the last 5 months, I have summed up all of the total profit losses. So basically this column over here, you can take a look at for all 29 setups. I end up with minus $242. That assumes that my portfolio was around $15,000 and that all of my risk per trade is around $200 and total investment per trade setup is around $3,000. Okay, just some numbers to put to perspective. Strategy B on the other side was in the positive. It was around $461. So that is really summarizing all of the profit and losses. So you can see the profits never went above $400. But there were occasions where the losses went beyond $200, and that's because I have this flexible stop loss approach that I have been following thus far. Relatively speaking, on a $15,000 portfolio, that's like minus 1.6% loss on strategy A and around 3% gain on strategy B. Now, if we take a look at what had transpired on the S&P 500 and the NASDAQ, let's go back to our charts. This is that price level. We were at all-time high when I started this YouTube channel. And then this is where we are. That's a pretty significant drop. That's almost 11% drop. And similar to SPY, we take a look at it. Not a significant drop, but it's still around negative 7.3%. Now, as you can see here, those numbers are actually reflected in this table. Yes, ultimately the S&P 500 and the NASDAQ have had pretty bearish markets and negative gains. On the other side, the specific strategy and the different methods that I've used, A and B, have demonstrated to outperform the market. By no means they have generated major gains. While that was true a few weeks ago, over the past few weeks, those gains have actually dropped, and now they're ranging around a break-even point. On the plus side, what I've done with all of this data, and I'm very thankful that I have been diligent and disciplined enough to collect it, is I have analyzed it and I have identified opportunities to make drastic improvements to some of these gains. Meaning that had I managed the trades in a different way, these gains would have transitioned in much greater numbers. And this is something I'm going to talk about in the next video that will follow this one. So for the time being, thank you all for being here, for spending some time going through the update of the week of the 29th of March, 2026. And wishing you all have a great week ahead. And until next week, take care, everybody.